This week is important from crude oil's perspective, since the OPEC and Russia are meeting together to decide the future of the production level by this cartel and even non-OPEC members like Russia. So what is the background? If you look just about 3 months back, we were talking about $100 crude oil because mainly there were tensions that the withdrawal or the gradual withdrawal of Iranian crude oil from the international market would lead to pretty huge deficits with demand remaining strong. Just to summarize or maybe just to recap, I would say in May or April 2018, Iran was supplying about 2.5 million barrels of crude oil per day, which constituted about 3% of world demand. So there were apprehensions and there were tensions that such a huge drawdown in stocks due to the sanctions by US on Iran, which were to come into force from November 4, they would impact the market adversely. So we had seen Brent crude oil prices rallying towards $88 virtually, and NYMEX crude oil almost close to $77. But after that, there has been a huge decline in prices, which is unprecedented in the last 10 years or so. From a monthly perspective, we saw about a 27 to 28% decline in both Brent and WTI crude prices. So initially, it all began with supply increasing, but then the market also started factoring in a deterioration in demand because there were forecasts by IMF or even by OPEC that world GDP growth wouldn't be as robust as it was predicted earlier. Also, the growth in demand for crude oil wouldn't be as much as it was anticipated earlier. So it was earlier anticipated that the growth for crude oil demand would be about 1.7 million barrels per day, but then it was downgraded to about 1.2% per day. So that was a dramatic decline of about 500,000 barrels per day. That is when crude oil prices got a trigger. They were around $65 as far as NYMEX crude is concerned, but then from there on we again saw it fall below $50. Domestic prices also suffered because of the same. Also, rupee appreciation in the last 1 month, that's from the beginning of November till the end of the beginning of December, we saw the rupee gain by about 5.5 to 6%. That also added to pressure on domestic prices, which virtually collapsed from a high of around 5,650 to a recent low of around 3,460 odd levels. Currently, we have had the G20 meeting between the US and Chinese presidents, wherein they did show the intention to solve the dispute on the trade war front, and there was a 90-day period which they decided they will take to have discussions to formulate a policy and have a deal so that the tariffs don't increase from the current 10% to 25%. Also, there are no new tariffs which might be levied. So this too provided a trigger to prices. So as I mentioned earlier that after the G20 meet, we did see crude oil prices rallying. They opened this Monday about 5.5 to almost 6% higher. Even yesterday they were about 2% higher. But then we had a slump because there were some tweets from Trump, which threatened increase in tariffs if China doesn't fall in line and adhere to his will, of sorting out the trade dispute. But I think it's more sentimentally driven now, and this is an extreme which crude prices have fallen to. So what we believe from a very short term perspective, maybe a 1 to 2 week perspective, is that the recent lows of around $49 or $49.5 would hold for some more time, and we would see the current short covering move extending higher, possibly towards $56 and $58.5 in an extreme case, because the prices are way too oversold and the current fundamentals don't demand the price to be as low as they are currently. So that would translate to supports coming around 3,600 as far as MCX price is concerned. On the upside, we could see the price surge towards 3,950 and possibly 4,100 in an extreme case. So a short covering move could follow since the prices are depressed, but that's from a short-term perspective. Eventually, if the prices fail to breach $61 mark as far as NYMEX crude is concerned, or about $72 in Brent, we would again see the decline, following up, and lower lows could be made eventually, but that's from a 2 to 3 months perspective, wherein the price could fall between $42 and $45. But for the very short term, as I mentioned, between 1 to 2 weeks, buying is advised on the mentioned levels, and we could see an immediate upside of about 7 to 8% in the next 1 or 2 weeks or so. So OPEC meet would be look forward to, because there is a possibility that they might be cutting their production by between 1 to 1.3 million barrels, which would also support the prices at current levels, because they are already pretty depressed and already have fallen a lot. So they would normalize a bit, but then again at higher levels we could see some resistance, and there could be a gradual decline after that.